If it's Friday, it's time for Barron's Buzz, where we take a sneak peek at the new issue of Barron's magazine. Joining me now, as always, is Barron's senior editor, Jack Hough.
How are you?
Hi, Jack. Now, you know this is hot off the press, as I'm watching you there before. You're still marking it up. It's a work in progress,
still,
but nonetheless,
it's
getting there.
It will be finished
I'm
on time.
sure it
Don't
will
worry.
be. These guys are professionals, folks.
Right.
So, what do we got? IBM, a bit of a feature this week,
Our
yes?
cover story is a Spotlight, a CEO Spotlight, an interview with Ginny Rometty, who is the chief at IBM since January 2012. And IBM is a company, it's a fascinating company that's really at the center of a lot that's going on in technology right now. Revenue has declined for 8 straight quarters there, not great, and shareholders are kind of iffy on the company, but really revenue is falling because they're getting rid of a lot of the low margin business. IBM is making its stand on private clouds rather than public clouds, on big data analysis, on customer engagement through things like social media and mobile. So it's a good opportunity for people to see how does IBM hope to turn it around, and what's working, what's not working.
It's a fascinating story. I mean, a company that is as old as that, that's had to deal with so many different disruptive changes, and it still manages to survive. But I mean, those numbers are challenging. Yep. What else? We've got banks you're looking at here. This could be interesting.
Banks look cheap. You know, the broad market, the S&P 500, about 16 times this year's earnings forecast. Bank stocks 11 times.
A lot of bad news this week from bankers. It's an interesting call.
They haven't done well. You know, our Streetwise columnist takes a look at the group here and says, first of all, we've got, you know, the GDP growth last quarter, well, there was no growth last quarter. It doesn't look good, but no one expects the number to stay that low. They think that during the second half of this year it could accelerate, and you could see interest rates come back. Banks really need a rise in interest rates here. But the group looks likely to return more cash to shareholders. They haven't been able to do that because of regulatory concerns, but cash is building up on their balance sheets. Eventually that's going to mean bigger dividend payments. It's an opportunity for a group that looks cheap, and loans are starting to grow a bit. So our columnist argues that it's time to take a look, and he's got some ideas on some favorites.
And finally, a fun one, although I'm baffled why anybody would want to spend this much money on this.
This is perfect for you.
For me, you think I'm in the market for this? Look, tell our viewers what this is.
You're a man who enjoys the finer things.
Yeah, obviously, I've got bad teeth. That's your concern.
No. This is artisanal toothpicks, right? So I hope you haven't been using ordinary toothpicks from the supermarket, because
I'm such a plebe.
We've got a profile of a company that for just $20 to $36, you can get a package of 48 toothpicks, handmade.
Less than $1 of toothpick.
Yeah, right. The flavors include salted birch, single malt scotch, and bourbon, nice. And it's made from northern white birch. I like to keep track of these things as sort of a stock market indicator. When prices for things like this get crazy enough, that's when it's going to be time to sell.
This is a little bit bubbly.
I'm not convinced just yet.
You're going to have to get those prices up to 60
bucks. I need to see more expensive toothpicks before I'll be convinced.
or smaller packets or something. All right, Jack, thank you so much.
Thank you.